Hey, good morning all. It's the 22nd of Jan 2020 and I'm eyeing up a current level to short the Aussie US dollar pair. I just wanted to go through how I've kind of come up with that and what exactly I'm looking for. Okay, so first of all, the analysis behind this. So the dollar index, so the DXY dollar index, it's essentially a good representation of the dollar direction. It's trading firmer. It's extending on yesterday's highs. A couple of reasons for that. First is, lackluster trade in the counterparts, so not much going on in other currency, but also ongoing developments in Washington. So essentially, the Senate stuck to party lines and blocked proposals by the Democrat leader to subpoena further evidence for the Trump impeachment trial. So essentially that could mean a little bit less chaos and hopefully, sort of less question marks over what's going to happen there. On the other end of the coin, the antipodians are currently pressured amid underperformance in China and following a weaker CNY reference rate setting. So very clear-cut stuff. So we've got political stuff going on about with Trump in the US, antipodians, so Aussie dollar, New Zealand dollar, they're underperforming following stuff going on in China. As we know, Australia is China's biggest trading partner, so that should be the currency that kind of feels that the most. So what I've done on my chart, essentially I've just gone to have a look at the overall trending. And this is on a 15-minute chart. You can see clearly that the overall movement down kind of goes beyond the 15-minute chart. So I moved up to the 30-minute chart and I could then see a bit of a clearer picture as to where it starts. So you can see the trend starts here and it's just really, really smooth like butter, as they say. So interested in shorting this, and we've got a kind of a bit of a confluence here at the 38% retracement. So for those of you who don't know, I like to really trade from the 38 and 23% Fibonacci levels. Things I take into account are daily pivots, previous days highs and lows, overall support and resistance, just to kind of pick between those two. And I really like the look of this 38% retracement level. So I'm going to be looking to short this currency at the 38. And I'm going to be looking to ride it down back to the zero with any luck. So I'm going to be looking for about 40 pips from that trade. In terms of stop losses, my initial stop's going to be at around the 69377 mark. It is just an initial stop loss, so bear that in mind. Members need to make sure they've been through the course on how I manage risk. So let's have a look at what's coming up today that could affect our bias. So in terms of releases that I'm particularly interested in, well, essentially there's not much there. You can see we're fairly clear with just Canadian news only really hitting the markets on a high impact basis. Tomorrow we've got US. Let's have a look. Oh, well, we've got the US crude oil inventories, but that's more of a CAD release. So that leads us to Friday, where we've got sort of flash manufacturing PMI, which may or may not have an effect. So we've got a fairly clean calendar in terms of this specific trade. Just be careful, though. If we enter this trade and we're still going overnight, we have got the employment change coming out for the Aussie dollar. We are expecting sort of a bit of a deviation from sort of the last figure, so just bear that in mind. But other than that, we're fairly clean for the rest of the session, so that's what I'm going to be doing today. So have a good day all. I am in a Telegram group if you need me, so just give us a shout if I can be of any help.